stock analysis and a couple things before we start out here. So the company we will be doing is CleanSpark, which is a Bitcoin mining company. Another thing, I'm going to start doing my videos basically the reverse way that I used to. So we are going to start out with the company's earnings as well as looking into their chart and giving analysis of that. And then we will get into financials. I'm starting to think, or I guess I have been thinking for a little while, that a lot of people don't want to just see dry financial statements right when the video begins, and I totally understand that. So I think what we're going to do is go through the summary as we normally do, and then do earnings, and then go into their chart, and then do financials, just because it gives a lot more information sooner, and for the people that don't want to look through just financial statements, which I totally understand, you will still kind of be encouraged to watch through more of the video instead of clicking off faster. So anyway, moving past that, we are doing CleanSpark today, Bitcoin mining company. Make sure to subscribe if you haven't. If you're interested, we're going to be doing all the stuff I just said. And yeah, let's get into it. So, starting off with their summary, Bitcoin mining technology, and they engage in the management of data centers, which basically just means the centers that mine Bitcoin for them. Looking into the basic details, market cap at 2.2 billion. We have a target price of $23, and no long-term growth rate listed. So this is kind of wild. They're at $8 right now. Target price is 23, which is one of the largest gaps with FactSet target prices we have seen. Now, does that mean that they dropped off a ton recently? It looks like yes, or possibly it just hasn't been updated in a while. But either way, looking at their chart, it looks like they have been in a bit of a $10 range for a long time now. To be fair, they have had massive drops and massive recoveries. This I don't even know. We're gonna have to look into the big chart here. So let's see what's been going on. So this company has been up and down a lot since they IPO'd. And by the way, there's also a chaos area over here with their chart, but that's sometimes just a bug with TradingView or just where there wasn't a ton of information available. But anyway, getting back into the actual company recently, we can see they were all the way up to a high of around $24. They're currently at $7.99. One thing I will say is that I am almost 100% biased against cryptocurrency and Bitcoin mining companies. So just keep that in mind as we're getting into the company. And we will be looking at the earnings in a second, but just keep that in mind. I am not a big fan of cryptocurrency. Yeah. So anyway, getting into the earnings now, a couple of highlights right at the start. Quarterly revenue up 120% year over year. Quarterly net income, which they have more net income than their quarterly revenue, is a little interesting. We'll hopefully see more of that. And EPS of 85.85. Marginal cost decreased 6% quarter. I'm assuming that's also quarter over quarter. So this quarter we saw continuous improvements, operating efficiency, fleet efficiency, marginal cost down, exceeded 2024 guidance and surpassed 40 which I believe is processing speed, I think. Delivered 162 million in revenue at a cost to mine of approximately $34,000 per Bitcoin. So that ratio seems pretty good. Considering Bitcoin right now is at like 70,000, I think. Again, I don't really follow it too much. I know it was just at just about 100,000 or over it slightly, but right now I think it's right around 70,000, which if that's the case, their profit is awesome. Well on our way to achieving 50 in the first half of 2025. We expect this growth will happen in the communities where they already operate through expansion of their current projects. Expanding into Georgia currently, so they have plants in Wyoming, Tennessee, and Georgia, and they're expanding more into Georgia, which sounds pretty solid. I mean, I don't want to say it's an issue, but the problem with Bitcoin mining companies is that their stock price almost entirely depends on what Bitcoin is doing. So, for example, Bitcoin has been down the past few weeks. The company's been down the past few weeks. Seemingly excellent earnings report comes out, and what happens? The stock price goes down. That's just an issue I have with Bitcoin companies. So being that dependent on something where the company could be performing excellently, but if Bitcoin is down, the company's going to be down, and that's kind of just how it works out. So Either way, continuing on, increase of 85 million or 120% from last year's first quarter. Net income for the quarter was 246 million, which for me, that doesn't make a ton of sense. Again, it is a Bitcoin company, so I'm sure maybe they just have different things happening. But the fact that they made 162 million in revenue and 246 million in net income doesn't really work out too well in my brain. So if you know more information on that, please let me know because I would be very interested to figure that part out. Anyway, they have just under $1 billion currently in Bitcoin, which is fairly interesting. So total assets at 2.8 billion. Which is interesting because currently their market cap is below 2.8 billion, so that is definitely fairly promising. Other than that, it doesn't look like we have any more guidance that we can see here. Let's scroll all the way down here and see what else we have. Okay, so it's just the raw financials. So going back into the earnings, let's see if there's anything else in here. So just Bitcoin mining updates, and that is about it. I think this is just their EPS. Let me just make sure. Um, and yeah, the comments that we already saw. So now let's talk about their chart a little bit more. So I'm going to be honest, seeing as they're so dependent on Bitcoin, I really don't see there being that much to analyze here. Um, Obviously, they had the peak in 2021, which again was alongside the last Bitcoin run, I believe. And considering they have not been anywhere near that high that we have seen the last time, I'm going to say that's not the most promising. And they continue to have these highs, but they're all lower highs. So you could say that they haven't seen really any meaningful growth in their stock price since 2018, which I believe is when they IPO'd. Let's take a look here. First trading date 2011. Okay, so before that they were just data centers, and I'm assuming they pivoted into doing Bitcoin. But unfortunately, TradingView does not have the price data from before then. But either way, they've just been seeing these lower highs over and over again, and now it seems like they're just going back down towards that probably $3 range. It wouldn't really shock me to see that, and not saying that it's even because of poor financial performance from the company, but I really think that just when companies are this dependent on Bitcoin, it's just not the greatest thing. For example, if we want to look at MicroStrategy, they have fallen off massively in the past few weeks, and that is almost entirely because of Bitcoin, which sucks for investors in the company because you want to invest in a company, but instead you're essentially just investing in something that moves based on what Bitcoin does, which makes sense and I understand it. But at the same time, it's like, why would you want that risk for the company? Like the company could be performing excellently, they could be having great results, but if Bitcoin goes down, the company's going down, which in my brain as an investor just doesn't make too much sense to me. But anyway, yeah, so let's take a look at competitors and see about doing a valuation here. So hopefully we can get a couple different ones that come up, and we have a lot, and of course, almost none of them have PE ratios. However, one thing I will say is that the projections for fiscal year two, which is essentially this is fiscal year one, which is for their current fiscal year. This is their next fiscal year. I don't know why they organize it like this, but the projections are for them to be very, very undervalued compared to competitors, which is very interesting. However, currently, compared to the competitors that do have positive EPS, they are very overvalued. So it's kind of a hit or miss thing here where it's like, I don't even know how to explain it. Do you buy now for the hope that they will kind of grow into their PE ratio, or do you just wait the 2 years for them to be well undervalued, or at least projected to be well undervalued compared to their competitors? In my opinion, I wouldn't think that that's worth the wait. Next year, their PE ratio is projected to be 6.8, which seems like a massive drop off from the current of 53, but could that mean earnings growth? Let's see, because I did actually forget one thing. So yeah, wow. Growth summary here is massive. Some of the largest numbers I have ever seen for any company. One thing I will say is their free cash flow is taking a big dump, which overall I would say is fine as long as their sales growth stays as strong as it seems to be. One thing I will say with Bitcoin mining companies is that as of at least right now, once you get your facilities organized and set up, the costs are essentially just electricity and maintenance, when you really think about it. And obviously, like taxes and things like that. But overall, I feel like the costs are very minimal once things are set up. So you can just reinvest everything into growth and growth and growth and just keep going that way. I don't know how long it's going to last though, because I feel like the mining industry is going to be very oversaturated. I'm sure it's probably already on its way to being very oversaturated, or it already is. But either way, there's always going to be some kind of demand as long as Bitcoin, something horrible doesn't happen to it and everybody stops using it. But either way, this kind of projection for the company is crazy. So, saying that, let's go into evaluation now and kind of see where they're at. So, looking at the valuation here, based on their current sector average, which to be clear only includes two companies and themselves, that gives them a current valuation of $5 a share, or a 35% downside. So, not the most accurate. They are projected again in 2 years to be undervalued compared to competition. However, right now it looks like they're either overvalued or most of their competition has negative EPS, in which case we can't really do much with that information. But anyway, that is how we're feeling. Or that's how it's looking right now. And then again, projected in 2 years to be very undervalued, based on current metrics compared to their competition. So that is something to consider. However, in that 2 years, will their stock price have grown into that valuation? Will their earnings have grown into that valuation? We'll have to see. But either way, yeah, that's what we have so far. So now we will get into their basic financials and see what's been going on. So, looking at the fiscal years, they do have 2024 here. So, let's see. Their earnings really have been massively growing over the past few years. So, they're definitely backing up the estimates that we've seen so far. Gross income is unfortunately negative over the past 2 years, which isn't great. And it's also kind of shocking, at least to me. Net income also massively negative. Now, to be fair, this is most likely because of enormous investments into their company and everything, but also we're seeing cost of goods sold being way over their sales. So, is that just like operation costs, which I mean, it kind of has to be, but that just seems kind of crazy. And also, if we look at SG&A, um, research and development is nothing, which makes sense. I mean, they really don't have to do any for their own, but SG&A is also fairly high as well. So they are just getting massive chunks taken out of their revenue. When, from what it seems, I feel like the expenses shouldn't be too crazy here. Either way, though, if we look at the fiscal quarters, we will see them. Um, we should see them turning a profit, considering their most recent EPS was reported as positive. Um, it's not showing up here just yet, but I'm guessing they do have, that last earnings report was a net positive. But overall, it does seem like they're a little bit more mixed recently. Let's see total shares. So total shares have increased a ton over the past few years. Now, I'm assuming what's going on here is they are selling equity in order to what's the best word for it? Invest into their facilities, which would absolutely make sense to me. One thing I will say is that would make sense as to why they are seeing some MicroStrategy. That would make sense as to why we are seeing a lot of lower highs, because in for example, let's see, in 2021, they had 41 million or 40 million shares. So down back here where their stock price hit $40 per share, they only had 40 million shares, whereas now if we look, they have 280 million shares. So it's a lot harder to get to those higher valuations when there's so many more shares that it's just been enormously diluted. So saying that, I would say that it's not as bad with the part about them having lower highs. That's not as bad, but also their track record of massive share dilution is pretty bad. That's not a good sign that you want to see. And also, just once again, that cost of goods sold that they have is huge. That is not good at all. Anyway, moving on to the balance sheet, they have seen a ton of cash growth over the past year and a half or so. They essentially had almost no cash, and now they have 1.2 billion in cash. So some of that is from debt, which is perfectly fine because they really didn't have any debt before that. So some of that is from debt, some of that is from selling off their equity. Um, and this is probably for a few different reasons. They could be just using it again to expand their facilities. They could be um, possibly looking at an acquisition of a competitor, or they're just looking to get a fairly large runway for themselves as if we well we'll just go right into the cash flows from here. We'll see they are bleeding out cash, so it could be used just to get them a fairly large runway for their cash, but most likely for either expansion of their facilities or acquisitions. We'll have to see. So getting into the cash flows, let's see what is going on here. So once again, that negative net income has been um, fairly consistent. However, there are a few quarters that we're seeing where it is not negative, which is good. But again, free cash flow, we're seeing that bleed off fairly significantly in the past year as well. So are they projecting this pain to continue for another year and a half? And that's why they have so much cash? Maybe, but it is also probably because of acquisitions that they might be doing. So you can see they have had some acquisition activity over the past few years, but will that translate to what their cash position is? We'll have to see. Either way, we're seeing a lot of negatives. 2024 has been clearly pretty rough so far for the company. Financing cash flow, again, massive sells of their own stock. So not great there at all. I'm really not a big fan of diluting stock, as you'll know if you watch the channel at all. But either way, let's continue moving on here. So the ratios are once again probably going to be pretty rough. And I think so they don't have direct quarters, unfortunately. But again, gross margin does not look great. SGA to sales has been dropping significantly, but also we should, if we look at the quarters, that should be completely changed around, which we should see, and we're not seeing it actually. So let's go back to that income statement and just look here. So SGA is the wrong thing I was thinking about. I was thinking about cost of goods sold. Sorry about that. Anyway, SG&A is actually looking very good, consistently dropping. Operating margin is getting closer to profitability, which is solid. Gross margin is as well. And you know what? We did actually see that where their cost of goods sold are very high, but they are getting closer to what their sales are. So that is something at the very least. But also positive net margin, which again, I think I did talk about that when we went over their actual earnings, was they were net positive, but also they had less sales than their net margin, which I'm sure there's something that I'm missing there about why that happens, but I honestly just don't know why that happens. So if you do know, let me know. Always ready to learn. But anyway, debt to equity margin is fairly low at 32%, which is pretty good, actually. So saying that, that's basically all I wanted to go through today. Let me know your thoughts. Tell me what I did wrong, honestly. Tell me what I did right, what you guys want to see more of. And yeah, that's all I have. Thanks for watching. Make sure to subscribe if you haven't, and I'll see everybody in the next video.